was a very strong report, and it does slightly jar with a little bit of the narrative that we've seen over the last probably month or so, where there was a little bit of an idea that the US economy was starting to weaken. We were starting to see some cracks in the consumer, but this really starts to change that narrative back again, that actually, you know what, the US is still very strong and really doesn't justify any rate cuts in the next couple of months, and possibly even, as you say, in 2024. And that actually has been the broader narrative that we've seen all the way through 2024, that those 6 rate cuts that we were expecting to see at the beginning of the year just keep getting pushed back and back and back. I think what's going to be really interesting, as you alluded to, was the FOMC meeting this week. There isn't going to be a rate cut, we know that, but it's more about what the Fed does with their dots. What does it say about the path of rates over the coming months? And probably more importantly, what does it say about the possible path of rates in 2025 and 2026 and the longer run?
Ben, what do you think the latest CPI print is going to tell us this week as well, as we come into the FOMC and, of course, the release of the dot plots too?
Yeah, look, I think it's going to be another one that is a little bit stronger, and again, is just going to sort of push back those rate cuts even further. I think the interesting thing on CPI recently is that it's been a little bit broader based in terms of where that inflation is coming through. So it's not just on services inflation that's printing higher. We're getting little bits of some of the energy price coming in a little bit stronger than expected as well. Gasoline prices printing a little bit higher. So what you're seeing in inflation recently is a plateauing and potentially even a little bit of a picking up in inflation. So that idea that the last mile was going to be harder for inflation to get back down towards target, I think that's just become ever more clear in recent months. So looking for another slightly stronger than expected inflation number over the course of this week. But what that does point to is that although inflation's a little bit stronger, and although we're not going to get as many rate cuts as perhaps the market had previously expected, it also does tell us that growth is still reasonably strong. And that's not necessarily a bad thing for markets. At these kind of levels of inflation, nominal growth very strong, that's actually pretty decent for risk assets.